Welcome to The Explainer. Ever looked at a Wall Street report and felt like you needed a translator? Well, that's exactly what we're doing today. We're taking a deep dive into a technical analysis of a company called Bitfarms, and our job is to cut through all that jargon and figure out what it really tells us about the stock's health. So you gotta wonder, right? How do these financial analysts actually try to predict what a stock's gonna do? Is it just a guessing game? Spoiler alert, it's not. It's less like a crystal ball and way more like a systematic checkup. And honestly, the best way to wrap your head around this whole thing is to think of it like a doctor's checkup. Seriously. The stock, that's our patient. The analyst, that's the doctor. And the report we're looking at, well, that's the medical chart, full of tests and diagnoses. So who's on the examination table today? It's a company called Bitfarms Ltd, or BIFF on the stock market. We've got its chart, fresh from the analyst's desk. Let's scrub in and see what the doctor found out. All right, let's get into the nitty-gritty. Now, we're going to do this a little backwards. Instead of building up to the conclusion, let's just start there. We're flipping to the last page of the medical chart to see the doctor's final diagnosis right off the bat. Okay, so here's the big takeaway. The report basically says, look, right now, this stock is in rough shape. It's showing what they call bearish momentum. Things are pointing down. But, and this is a big but, there are a couple of bright spots. First, it doesn't have a wild, unpredictable fever. And second, the company is making a huge pivot that could be a game changer for its long-term health. It's kind of like a patient who's got a nasty flu right now, but they've just signed up for a marathon and started training. Short-term pain, maybe, for long-term gain. Okay, so that's the final diagnosis. But how did the doctor get there? Well, just like in a real checkup, you don't start with the MRI. You start with the basics, right? You check the temperature, the blood pressure, the vitals. And stocks have vitals too. First up, the most fundamental vital sign of all, its price. When this report was written, Bitfarms closed the day at $2.58. You can think of this as the patient's temperature. It's our baseline, our starting point. But, you know, a single temperature reading doesn't tell you everything, does it? You need context. So let's look at the range. Over the last year, this stock hit a high of 660, but it also cratered to a low of 189. So where does our 258 price sit? Yeah, it's way, way closer to the low than the high. That tells you right away this patient has been feeling pretty sick lately. All right, next vital sign. This one's called beta. Just think of this as the patient's personality. Are they generally calm and steady, or are they prone to flying off the handle at the slightest news? Beta measures how a stock's price swings compared to the entire market. If it's over 1, it's more dramatic than the market. Under 1, it's a bit more chill. So what's Bitfarms' personality like? Its beta is 0.801. Since that's under 1, it means it's actually less volatile than the market as a whole. So to stick with our metaphor, our patient might have a fever, but at least they're not having wild mood swings. They have a relatively calm demeanor, which is good to know. Okay, vitals are checked. Now things get really interesting. We're moving on from the basics to the more advanced lab work, the diagnostic tests. This is where the doctor looks for the deeper clues, the hidden signals that tell the real story. First test on the docket, moving averages. Don't let the name scare you. All this does is track the patient's health trend. Is the fever getting worse or better? By smoothing out the daily price bumps, it helps the analyst see the real direction the stock has been heading. Is the momentum up or is it down? And the results for Bitfarms? Well, the test shows that its recent average prices are all higher than its current price. What does that tell us? It's a classic red flag, a bearish signal. It's like looking at a patient's chart and seeing their temperature has been dropping steadily day after day. The trend is not your friend here. Okay, next diagnostic tool. It's called the RSI, which stands for Relative Strength Index. The best way to think of this one is like a stress test, or maybe an energy meter. It tells you if the stock has been running a marathon and is totally exhausted, that's called overbought, or if it's been sitting on the couch for weeks and is getting weak, that's called oversold. So the RSI runs on a simple scale from 0 to 100. Anything over 70 and Wall Street thinks it's overbought or overheated. Anything under 30 and it's considered oversold or running on fumes. So where does Bitfarms land? Its RSI score is 32.73. So what does 32 mean? Well, it's really close to that oversold line. It's basically knocking on the door. This is a huge clue. It suggests that maybe, just maybe, the selling has been way overdone.
For some investors, this is a flashing light. It's a sign that the patient has been pushed down so hard, they might just be coiled up for a big spring back.
Okay, let's recap. We've checked the vitals, we've got the lab results back, so what's the doctor's final prognosis? Well, this is the important part. There isn't just one. Based on everything we've seen, the analyst lays out 3 completely different paths this could take.
So, here are the 3 possible futures for our patient. First, the bullish case. That's the optimistic one. This happens if that oversold energy meter snaps back and investors start getting excited about that new AI plan. Then there's the bearish case, the pessimistic view. This is where all those negative signals we saw just keep dragging the stock down. And finally, you've got the neutral case. This is where nothing really happens. The stock just kind of flatlines, waiting for some big news to push it one way or the other.
All right, so after all that, the bullish, the bearish, the neutral, what's the bottom line? What's the final takeaway? What prescription is the doctor actually writing for this patient? Here's the final word from the analyst. Number 1, the stock's health right now, it's not great. It's in a weak, bearish phase. But number 2, it's also deeply oversold, which is often a sign that a rebound could be coming. Number 3, the real wildcard, the thing that could change everything, is the company's big bet on AI. So what's the strategy? The report suggests something called a speculative buy on dips. In plain English, that means if you're willing to take a risk, consider buying when the price is low. But, and they make this crystal clear, you have to protect yourself. Use what they call stops to make sure you don't get wiped out if things go south. And really, that's what this whole checkup teaches us. Technical analysis isn't about having a crystal ball. No one can predict the future with 100% certainty. What it is a toolkit. It's a way to diagnose the patient's current health, understand the risks, and map out the possibilities, the good, the bad, and the ugly. It's all about playing the probabilities, not listening to prophecies. So I'll just leave you with this one thought. Now that you've seen how to read a stock's medical chart, you know how to check its vitals, you know what the lab tests mean, and you've seen the possible prognoses, how does that change the way you look at a stock chart? It's not just some random squiggly line anymore, is it? There's a whole story happening just beneath the surface.